Okay, hi, good afternoon, everybody. Welcome. My name is Nick J, and welcome to the Trading Setup channel. Um, Today is going to be probably one of the most important videos that you're ever going to watch in your life about trading. It's one of the things that really gets neglected, um, but it's also the solution for most people's problems. So we're going to be looking at that. Um, we are on the second last day of the year. So I figured this will be a perfect topic for this time of year because the market is quite challenging at the moment. So yeah, I hope everybody is enjoying their festive season. So we're going to look at psychology today, and specifically trading psychology. So guys, before we start, if you like the content, be sure to hit that subscribe button and hit that notification bell if you want to get notified whenever I'm posting videos. It will really help the channel and help us to keep doing this. Also, as always, those of you guys trading with PO Broker, we have a promo code for you today, and that's going to be PSY80. It's PSY80 for an 80% deposit bonus on from as little as $10. Okay, so we're not going to be spending too much time on the charts today, and I'm going to explain why in a minute. But like I said, this is a really, really important video, especially for those of you that's been struggling for a while, jumping from between strategies, trying to find that perfect strategy that's going to make you money. I'm going to explain why that's not working for you, and we're going to look at ways to remedy that. Okay, so we're going to kick off today. We're going to talk about two things. First thing we're going to talk about is the illusion of trading success. What do we mean with the illusion of trading success? So it is very well known that by far the largest percentage of people attempting or trying their hand at trading, whether it's long-term, short-term, day trading, stocks, forex, most of the people end up losing money. So we know this. This is statistics that we can get from different places. We know most people lose money. But still, most people that start trading do so in the hope of making a decent amount of cash in a very short time. So if we know that most people fail, and if we know that most people try to make a decent amount of money in a short period of time, we can start drawing correlations and see that it's these people that are failing. So we have the perception of what trading is, and this is what you will see mostly out in the wild. You will see a lot of videos that will enforce this false perception, but this is not what trading is. You are not you are definitely not going to get rich quick on trading. Trading is a slow process. We always say trading is a marathon, it's not a sprint. So we're not going full out the gates every day for an hour. Instead, we're taking our time, we're pacing ourselves, and we're doing this over a period of time. So let's have a look at I'm sorry, I'm working with a fairly decent list here, much larger than I normally do because this is such an extensive topic and it's so important that I really don't want to miss anything. So, yeah, a lot of people have been jumping from strategy to strategy and at the end of the day, not understanding why they're not successful, why it's not making money. I have taught strategies to a lot of people in the past, and I've seen this as well on a first-hand basis. You can show people a strategy, even a simple one, and they will not be able to successfully use that strategy. And we have to look at what the reason is for that. So if the strategy is not the secret to trading, what is? You can have the best strategy in the world, but if you don't understand how to use this, it's going to be useless in your hands. And I know it does sound a little bit gloomy, but like I said, we're going to look at the ways we can fix this and what to do to avoid taking as many losses as you are doing at the moment. Okay, so the other thing we want to quickly touch on is why we need to have a deep look at our trading psychology, why it's important to trading. I am pretty sure that if all of us think back to a time where we were under extreme stress, this could have been in a work environment, this could have been at a sport event, or a time when you had conflict with somebody in your personal life, whatever the case may be. We all have times in our past where we made bad decisions under stress. And this is normal. We do that. Okay, so that's something people do naturally. We tend, when we get worked up, when we get overwhelmed by emotions, we're not used to handling such strong emotions. We tend to make bad decisions. But the thing is that we are making decisions as traders. We are making decisions every day where we can actually lose money. So we are constantly under pressure when we are trading. We are under pressure to essentially to perform. And we need to understand that we need to remain rational. I'm sorry, I'm kind of like went blank for a second. Give me 1 second. Let's see, we've done that. Okay. So even if you speak to experienced traders, people have been doing this for a long time. I can take myself as well. Sometimes I still struggle with that as well. I am a very emotional person. So this is something that I really need to be aware of when I'm trading. And I need to watch out if I'm losing, if I feel like I'm getting emotional and I'm starting to make bad decisions. I have to be aware of this and get up and stop trading and go do something else for a while, because it's kind of like we get mentally hijacked by fear or by greed. Sometimes fear will be when we've taken a few losses and we see our balance dropping, and then and we start to realize if I don't start getting this right, I'm going to lose all my capital. So you develop a sense of fear within you, and this will influence your decision making. And it's also greed. Also, you can also use the same example for greed, I guess, where you've lost a bunch of your capital, and you want to get this back. Or where greed often really nails people is when they are having a good day, and we start thinking nothing can go wrong. Everything we do is great. So I've often seen people have a good run. They'll get a few a few good trades in succession, especially if they are close to each other, and people just start increasing their trade sizes and just going for it, and all of a sudden you start losing trades again. We've covered this in previous videos about market cycles. I did touch on this. So we know that all strategies lose eventually. You will have some losses. So when the money's good, people start going big, and then they get hit by one or two losses, and they, with the increased trade size that they're not supposed to be using, they tend to lose quite a lot of money in quite a short time. So even even if you have a great strategy, I mean, we've discussed quite a few strategies so far on this channel, and all of them are actually good strategies. All of these will give you a very decent, consistent win rate, but these are just tools. And um, if I can't control myself using these tools becomes dangerous, and I can lose my money and I can or my capital. Um, so you guys will if you've watched a few of these videos, you will remember that one of the things I always hammer on, especially when we discussing a specific indicator, what it does, I always hammer on. It's very important to understand what it is showing us, to understand what the indicator is showing us, the data it's giving us, so that we can use that data successfully and extrapolate, or make decisions based off the data. Um, so if we don't properly understand our tools, or if we become impulsive, if we impulsively use those tools, these becomes dangerous. So a strategy, any trading strategy, um, can become really dangerous if your psychology side of trading is not in order, if we can put it that way. Okay, so the important thing I think to take from this so far is it does not matter what strategy you use. It doesn't matter what trading strategy you use. It will be useless in your hands if you do not, first of all, understand it, and second of all, if you do not have, if your mindset isn't right, isn't correct, if your approach to trading and the way you think of trading isn't correct, you will you will not be able to use that strategy successfully. We know, if you've ever spoken to other people that trades, you will know that by far most of the people you will talk to, over time, you will realize that they are basically jumping from strategy to strategy. They'll try this thing for a while. They end up losing money. They go look for the next strategy. They try that for a while, end up losing money, and they go to the next one, trade for a while, end up losing money. This is a cycle that most people don't ever get out of, because they are still chasing the perfect strategy, and it's something that doesn't really exist. There are good strategies and bad strategies, or I would say better performing. Some strategies perform better than others. This is true, but there's no magic strategy that you can just give to somebody and where they will make money if they don't understand it, if they still make emotional decisions. This will be useless in their hands. Whereas if you give this to somebody that actually understands the psychology side of it, they will use it very successfully and consistently. So how do we do this? Okay, so we have, in my opinion, we have four challenges when it comes to four psychological challenges when it comes to trading. First one will be discipline versus impulsiveness. What do we mean with discipline versus impulsiveness? Discipline the discipline where you, or the discipline factor comes in where I have a strategy. I'm going to use divergence as an example today. So whenever we want to use an example of a strategy, I'm just going to use divergence because it's very easy. It's a very easy strategy to use as an example, and I'll explain that in a bit as well. All this will make sense as we go along. Suppose I use divergence. I'm using the stochastic oscillator, and actually, for this example, let's go to the chart. Suppose I'm using a divergence strategy, and I'm using the stochastic oscillator to find divergence entries. If I my rules for divergence when I'm using the stochastic for a divergence is divergence needs to form we all know the 4 different kinds of divergence. If you're not familiar with divergence, I did do a previous video. Check it out. It covers everything on divergence, but we get 4 different kinds of divergence. So I have to wait for divergence to play out. My trigger for a trade, if we look at this example, I think actually I did a trade here. My trigger for my divergence, this would have been normal bearish divergence. The trigger will be when the stochastic crosses over. So that confirms my divergence. Until the stochastic hasn't crossed on the second high or low that it's making, that divergence is not yet confirmed. The discipline is waiting for that crossover. That's where the discipline comes in. I have to wait for that crossover to happen, because quite often it looks like it's going to happen, and this happens quite often. It will look like it's going to form divergence, but ends up turning back up again and never ends up crossing, and the divergence ends up not forming divergence at all. And if I would have taken an impulsive trade, seeing it looks like because it looked like it's going to form, if I did take the trade, and I would have lost it, and I would have blamed the strategy because I wasn't disciplined enough to stick to this strategy, to wait for my entry conditions to be met. And that's the difference between discipline and impulsiveness. If you see something on a chart, or if you take a trade, even any position you open, and you cannot properly explain why you took that position, that was not a disciplined trade. And the answer, it looked like it was gonna go up, is not a valid answer. This is something a lot of people actually often tells me when I ask them, why did you take this specific trade? And they will just say it looked like it was going to go up. And that's one of the quickest ways to get rid of all your capital. Okay, we can't predict the market, we can only follow, and that's why we have strategies. Our strategies allows us to follow the market, and we wait for entries from our strategies to open positions. Okay, so that's one thing, discipline versus impulse. The other thing we need to, or the other challenge we face in general, will be having patience in a fast-paced market. We, especially us guys that trade during the day, and we trading 10-second or 1-minute charts, or even 5-minute charts, we see a lot of movement. We see a lot of quick movement as well on top of that. And it is a big challenge for us to have the patience to sit and wait for trades. This kind of lines up with discipline, but discipline for me will be in the execution part of the trade, of your positions, from your strategy, whereas patience will be waiting for that signal. And patience is especially difficult for me. That's one of the things I really struggle with when I'm trading, is having patience. Some days I will wait. I have to wait for half an hour, even sometimes an hour. Some days are just slow. And after 30 minutes, I start getting really, really impatient. Instead of forcing trades, instead of looking for trades that doesn't fall within the parameters of my strategies, instead of doing that, I get up and go do something else. I leave. And I will leave for a couple of hours. Sometimes even for the rest of the day, depending on what the time is, or what time of day it is. I struggle with patience. I cannot sit and watch a chart for an hour and not get entries from my strategies. My way of dealing with this is leaving, is stop trading, because I know if I am to sit down or to keep sitting and keep watching those charts, I'm just going to get more impatient, and eventually I am just going to get what, like we mentioned earlier, that mind hijack, and I'm just going to open a position or two just to feel like I'm doing something. Okay, and this is not the way to do it. We need to, we need to find a way to deal with, firstly identify these situations and then find a way to deal with it. Some people can have the ability to sit and watch a chart for an hour. If you have the patience for that, that's brilliant. Nothing wrong with it. But if you do not have the patience, you really need to do something about that. Identify that issue and find a solution that will not affect your trading. But you cannot, we cannot simply open positions because we're impatient. So most days we're going to get, especially if you're using the strategies we've been discussing on previously, we've discussed previously on this channel, you will get, in general, you will get a decent amount of entries, but there will be days, there's always those exceptional days where you're not getting entries. Okay, so we need to identify those, we need to handle them. The third issue, the third challenge we've got is the greed trap. The greed trap is, how do I explain this? If we are chasing unrealistic gains, okay, you will very often, there's so many of these videos online, and it infuriates me where people will show you can turn $100 into $1,000 in 15 minutes. It's unrealistic. It doesn't happen. Okay, so it's I cannot begin to explain how dangerous and destructive that concept is. It doesn't work that way. Yes, you can turn $100 into $1,000. We can do that. We've done it. We cannot do this in 15 minutes. We cannot do this even in a day. Okay, so if you're trading, especially if you're new to trading, you need to set yourself realistic expectations. We are trading, especially if you're new to trading, you should never trade more than 2% of your total capital per trade. Okay, so don't risk too much. We need to keep the risk low, and we need to keep our expectations low. Yes, we can make good, you can make very good money with trading. It is possible, but this is a long-term thing. When I say long-term, I'm not talking about years, but it's definitely not going to be a couple of minutes or a day as well either. Okay, so set yourselves realistic goals. Don't chase trades because you want to double your balance in a day or nonsense like that. Okay, that's extremely difficult to do, and even worse is that while doing that, you will eventually get lucky, and this will reinforce the idea that you can do this consistently, which is not true. So that's just going to reinforce that idea, and you're going to set yourself up for failure because yes, you'll get lucky, but it's definitely not sustainable. You're not going to be able to do that in the long run. There is no strategy that I know of. There's nobody that I've ever met, and I've met a lot of people doing trading. There's nobody that I've ever met that can run consistent like that. Nobody that I know of does that. It is what it is. Okay, then the fourth challenge we have as traders in general will be revenge trading. Revenge trading is our decision making after taking a loss. The decisions we make immediately after taking a loss, usually most people usually end up revenge trading because they've taken a loss, They really do not like having lost money. So they try to recover that money that's lost as soon as possible. And it's an unnecessary action. We know that any strategy does incur losses. We know we need to accept those. It's part of trading. It shouldn't matter too much if you're not trading, like we mentioned in the previous point here about greed. If you're not trading too big, if your trade size isn't 10 or 20% of your capital, this really shouldn't matter to you taking a loss. We will always have losses. Nobody runs 100%, period. But people end up taking a loss, and usually because of one of the other reasons, they get super emotional about that loss, and they want it back. They want it back now, which usually leads to impulsive decisions, where they will convince themselves that they see a trade immediately within a minute after losing a trade. They will convince themselves that they see something and this is going to win, and they end up losing again. And they are then they end up basically compounding those emotions, because now their emotion is a lot more than it was. You're in a deeper loss now, or a bigger loss, in a very short period of time. And again, you increase your trade size, take that trade, and end up losing that trade again. Before you know it, you don't have any money in your left in your trading account. And then again, we're back to blaming strategies. It's a bad strategy. I'm going to go look for a new strategy. But like I said, even the best of strategies will not be effective if we do not look at the psychology side of stuff. We need to understand this. We need to understand ourselves. It is super, super important. Okay, so let's look at 3 root causes for this. 3 things that causes us to get emotional and make bad decisions. First thing I want to talk about is cognitive bias. This is a term that, again, we can actually go to the charts to explain this one. Cognitive bias will be when you have made up your mind about something that's going to happen, and you now look for excuses to execute that. And this is something a lot of people do, and a lot of people don't really realize that they're doing this. If we look at, this is a 10-second chart on Euro USD, okay? We can see price pushing upwards here. Now, if I decided, while price was, let's say a couple of candles back, if I decided that price dropped quite a bit and is now gonna go up, that is, if I do that, I have formed a cognitive bias. So I have made up my mind that price is going to go up now. And quite often the opposite will happen. But once I've decided price is going to go up, I'm then going to start looking for reasons to take a buy trade. And this is a massive, massive mistake. Right. This is in part the reason I've said so many times that nobody can predict the market. We cannot predict what's going to happen, but it's fairly easy to follow what is happening. Okay. We need to get our prediction thought process out of the way. When it comes to trading, the only thing we can do is watch what is happening and then make decisions based off the data we see, without having a bias towards, or let's say bearish bias or bullish bias. We cannot predict what price is going to do. If that was possible, most people would be insanely rich. Most people would be successful in trading if it was really possible to actually predict what the market was going to be doing. But we can't. we can follow though, and that's what all the strategies, especially the strategies we've covered on this channel, all the strategies is focused around showing us something that's happening in the market, and something that we can follow. Okay, so cognitive biases is one of the causes of failure. Let's say failure in trading. It's one of the bigger causes, because people, and let's be honest, how many of us has thought in our lives, this thing has fallen so far, it has to come up now, right? We've all thought that. I have. I know I have. We look at an asset, and we see a couple of big green candles, and we think to ourselves, it can't go any higher. It has to come down now. But there is no such thing. This is a bias we create with ourselves, and we convince ourselves that this thing must turn now. There is no indication that it's going to be turning, but we convince ourselves that this has to be the place where it turns, and we start looking for reasons to take trades there, which is usually wrong. So that's cognitive biases. The second thing is emotional triggers. This one is a bit more tough, and it's a very personal point. Can I use the word point? This is something you'll have to figure out for yourself. Okay, so this is not something you can somebody can help you with, but I can explain to you what it is, and you can then know what to look for. So emotional triggers is something that brings up certain emotions with you, and this could be negative or positive emotions. We mentioned earlier, a lot of people always, the first emotions they will mention is fear or greed, stuff like that, especially fear, and that's a negative emotion. But people don't often talk about how positive emotions also impact your decision making. We did touch on it just a little bit ago, where we said that when people start going into I want to say a streak where they start winning and winning, and especially if it's in close succession to each other, they start getting a feeling of euphoria, and we get blasted by dopamine, and we stop thinking clearly, and they'll just start increasing the trade sizes because they're on a run. It's basically the same stuff as going on a streak in a casino. You get that feeling. But trading isn't gambling. It's not a casino thing, but it's the same. We do get the same effect when we start winning a bunch of trades, especially well, how can I put this? If your strategy, if you're going above your strategy's average win rate, right? If you start winning quite a few trades, we get excited, we get happy, and this also influences our decision making. And some of these can be triggered by external stuff, and this is where I couldn't really come up with a decent example of emotional triggers in your personal environment, but suppose you've got a neighbor, and I know this is not a great example, but suppose you've got a neighbor that's got a dog that's barking a lot, and every time that dog barks, you get angry, you get frustrated because you're growing tired of it. That will then be that dog's barking is an emotional trigger. So every time you hear it, a certain emotion comes up with inside of you automatically. And that's an emotional trigger. And like I said, these are personal. I cannot tell what anybody's specific triggers are, if they have any. Some people don't have, other people do have. But this is something you need to sit down and figure out for yourself. What triggers me emotionally? Is it a loss? Is a loss a very if a loss is a very emotional thing for you, you have two problems. the problem number one is you're trading too big. That's usually the that's usually the reason. And then problem number two, you'll need to find a way to deal with it. Dealing with it something like that can be relatively simple, as simple as taking a 15-minute break or a 30-minute break. And during that break, not do something that will agitate you more. Go sit and do some breathing practices or something. Whatever you need to do. People differ. There's no universal answer for stuff like this, unfortunately. But at least you know now what to look for, and how to, find it, identify it, and then handle it. Okay, and then lack of clarity. Lack of clarity is a big one as well. What do we mean when we say lack of clarity? Again, I did mention earlier that if we don't understand our tools that we use, so this could be a strategy in totality, or an indicator, or even the platform you're using. A lot of people don't fully even understand the platform that they want to use. If you do not completely understand the tools you're using, you're not going to be clear about your decisions. Your decisions are going to be clouded with, let's say, clouded with doubt. Because you're going to always, most of the time, it's going to feel like you're guessing. You need to completely understand the tools you're using. And again, this is the reason when I'm doing, especially when we're discussing a specific indicator, you guys will know that every time we look at the math, we look at exactly what that indicator is showing us. Then we look at exactly how we can use it on a chart, what it shows us. Only then can we use it successfully, and we don't have to guess or second guess ourselves. We can use our tools with all the confidence in the world once we understand them. It's really, really important. And this is something a lot of people neglect. Okay, so whatever strategy you're using, it doesn't matter. If you're using one of the ones we've done on this channel, if you're using something totally different, doesn't matter. There are a lot of good strategies out there that I've never looked at. It's the ones I use make sense to me. I like them. I'm familiar with them. But the important thing is that whatever strategy you are using, it is important to make sure that you understand the indicator or indicators that you are using for that strategy. It's super important. So you don't have to guess or have doubts. Is this really showing me what I think it's showing me? So that's what we mean with lack of clarity. All right, so let's do a quick recap. Three things that causes us, or three root causes of the psychological issues. Cognitive biases, right? So we decide ahead of time what we want to happen, and then we look for excuses to make that happen. Second thing will be emotional triggers. And then thirdly, lack of clarity. Lack of clarity being we don't really understand the tools that we are using, and so forth. Now for the good news. Let's look at solutions for all of these, because there is solutions, there is ways around this, and all it's going to take is a little bit of effort, which is, I promise you, worth it, especially if you really want to make a career out of trading. Especially if your aim is to one day go full-time, or even if your aim is just to make consistent money. If you want to do this part-time, 1 or 2 hours a day, there's stuff that we can do, and stuff that we can do to manage these issues. So let's look at them. First of all, adopting a process-oriented mindset. What do we mean? A process-oriented mindset. this is where our strategy comes in. We need to get in the habit of executing our strategies. I used the divergence example earlier. You have to wait for your strategy to execute, to actually give you a signal. We have to train ourselves to wait for that. We cannot, if I'm chasing profits and I'm breaking out of my strategy parameters, I am not process orientated. Okay, so I'm not following the process anymore. We have to understand that if you want to start trading, we build a strategy. Okay, so I want to start trading, and I look at a bunch of different things, and I develop a strategy, or somebody tells me a strategy, that maybe as well, but I get my hands on a strategy, whatever the way is. Now I have to follow this strategy, right? I have to execute this. So a strategy is just a blueprint. If this happens, I must do this. Okay, so that's the basic idea of a strategy. If this happens, I do this. If this doesn't happen, I don't do this. Okay, so strategy gives signal, execute trade. Strategy doesn't give signal, don't execute trade. It's really as simple as that. But this is something a lot of people tend to struggle with. It's a simple concept that people can't wrap their heads around. You need to do what you have to do, what you must to get over this. If you have to write your strategy down and paste it on your screen, on the side of your screen, so you can keep looking at it, do that. Whatever you need to do to get around this, and this will differ from person to person. Unfortunately, again, the psychology of trading side of the game is difficult in the sense that people differ. Okay, so there is no universal answer, one answer fits all, or something like that, unfortunately. But we do know that there's things that need to happen. So you have to go and sit down and ask yourself, when I'm trading, am I following a process? Am I following a trading plan? Super important. If you don't have one, you need to make one. But you need to sit and ask yourself, am I doing this, or am I just chasing wins? Am I just chasing a couple of bucks? And another silly thing, start small. Set yourself the goal of doing this for, let's say, an hour. We are entering the new year. This is a great time for stuff like this, okay? Because right now, today's Monday, Wednesday and Thursday, I believe the markets are going to be, I think Thursday as well, most markets are closed. This is a 3-day week. Basically, last week was as well. Focus on these things so that when we really kick off again in the second week of January, when everything starts returning to normal, you've got a foot in the door on this. Set yourself just an hour every day from now until next week. Watch the charts. Look for your strategy. You can even do this on a demo account. You can actually do this on paper as well. You don't actually need to click buttons, but do this. Watch your strategy and just mark where you would have executed and wait for it. Have the patience. Set yourself a goal just to do it for 1 hour, nothing more a day. Don't go over. When you did this, right? If you was able to successfully sit just for an hour and wait for your strategy to give you signals, not jump the gun, Not make rash decisions, nothing. Just follow the process of draw yourself a plan up and follow that plan for an hour. Once you're done, sit back and feel good about it. Take the time to feel good about executing your trading plan properly. Take time for yourself. Just sit back, close your eyes, and just feel good. You did it. And then tomorrow you do it again. And the day after you do it again. Just an hour. Do this for a week. Or, a couple of days. This is a great time to do this. This is a lovely time to do stuff like this. A lovely time of year. Because next week, we're going back to normal. Next week, the markets are really going to start moving again. And we have a lot of action coming this year. Guys, I'm telling you, it's going to be a great year. Things are going to be awesome. But right now, this week is not ideal conditions to trade. Do this. Focus on getting this right. And then next week we kick off. Okay, mindfulness and emotional regulation. This is something that changed my way of trading profoundly. Since I adopted this, my trading has changed drastically. So, mindfulness is something you can Google, and there's a lot of content. There's a lot of free content out there on this. So this is not something you will need to pay for. It is something you will need to spend time on. Okay, so it does take a little bit of time. For me, I do it every morning. I usually wake up between 4 and 5 in the morning. I'm up and I use that time. I use an hour then just to shut myself off, focus on me, what's going inside me, do some breathing exercises, be aware of what's around me. Okay. Mindfulness is a great tool to help regulate emotions. It does take some practice, but like I said, the only thing it's going to cost you is a little bit of time every day. You can do like 15 minutes. You don't need to do an hour, or it doesn't need to take a lot of time, but it does need to be consistent. You can't do this today and then again on the weekend and maybe the weekend after that. This is a daily thing. But I can promise you this will change your life, or at least change your trading. Because after a week or 3, you're going to realize that you are less emotional, you are more aware of what emotions is presenting themselves inside of you, and you're going to be it's going to be easier to handle those emotions. This is something that's absolutely great, and it's something nobody really talks about, especially connected to trading. But I can tell you guys, this is one of the things that absolutely changed my trading, and for the better. It improved. My trading improved a lot since I started doing this a couple of years ago. Like I said earlier, I used to I struggle a lot still today. I still struggle a bit with emotions, but not nearly as bad as I used to, and not just related to trading. For me, I struggled with emotions all my life in trading and whatever. And this has really, really helped me. And it will, if you put in the time, it will yield results. Just do it consistently. Take 15 minutes a day. 15 minutes is really not that much. But yes, do something like that. Another way we can solve the problems we discussed is by reframing losses. This sounds silly, but losses are actually good things. A loss is a good thing, because it's a learning opportunity for us. Okay, if we treat it as what it is, it's a good thing. Obviously, racking up a bunch of losses because you're not doing what you're supposed to do, That's not what I'm talking about. But if you are following your trading strategy, you're following the process, or you're following your trading plan, and you take a loss, instead of looking at it as I've lost money, look at it as an opportunity to learn. Every time you take a loss, you need to, how do I put this? Analyze the trade. Look at the trade you've taken. Look at why you've taken it, and try to find out why that trade lost. If it is within your strategy, okay. So if you are just blindly taking trades, it's kind of pointless doing that. But if you are within your strategy parameters, which you're supposed to be, if you are within your strategy parameters and you are, and you do take a loss, take a hard look at that trade and figure out why you lost it. And it could be for a bunch of different reasons. Reason number one could be that it just lost. You did everything right, it just lost. It happens. But sometimes we will realize that, okay, so I didn't quite follow my strategy in this case. I made an emotional decision maybe, and I took a trade that I shouldn't have. Now from that you can learn. That's a learning opportunity. So you can then, try to figure out, okay, so why did this happen? What did I see to make me think this? Why did I get emotional? How can I prevent this from happening again? Or maybe you find that you were biased. You thought that this is going to drop. You developed a bias on price and executed a trade on that bias instead of what the data is showing you. And that's a learning opportunity. You can do something about it and fix it. Okay, so losses shouldn't be seen as just bleeding capital, unless you are, like I'm saying, if every trade's a loss, and you're not getting, if you just like, if your balance is drastically shrinking, you're doing something wrong. And then you need to find then you don't need to look at at specific losses. Then you need to look at what you're doing as a whole, because you're doing something terribly wrong. But once you're in the habit of, once you've developed your process, really look at losses as opportunities to identify areas. Maybe it's a problem with your strategy, so if you find that you are getting consistent losses on a specific parameter of your strategy, maybe worth looking at the parameter and see if you can change that. It's maybe some adjustment. You adjust it a bit, do a bit of testing, and see, okay, fine. So I changed this small bit of this strategy here, and that sorted out. Maybe it's some false entries, that's false signals, firing because of one parameter somewhere that's set too low or set too high or something. You can look at that as well. It's always a learning opportunity to take a loss. And this is what you should see it as. It's not something to get emotional about. It's something we can learn from. Okay. Then, fourth solution that I have for you guys is keep your trading structured. And with that, I mean, it could be stuff like make a checklist. Before you start trading, make a checklist of stuff you need to check every day. I have my routine, set up routines. I have my pre-trading routine before I even look at charts. There's other stuff I look at the days. For example, before I even open a chart, I look at the economic calendar for the day and for the next day. I look at what the day is going to bring me. Is there important data coming? Stuff like that. So I need to be aware of that so I'm not caught off guard. So structure your trading, structure your time, set time out for your trading, and set time out for breaks, and stick to it. I start trading a specific time every day. My day start trading. Let me put it this way: the trading day basically begins for me at the moment 9:30 in the morning, because the UK opens at 10 o'clock. No, I'm sorry, 8:30. UK opens at 9 o'clock. So 8:30 my trading day begins technically. That's when I start looking at the calendars and stuff like that. After that, I open my trading platform, and then I wait for the UK Open. I don't trade before that. And then I just watch the UK Open, see what happens, see what the day is going to be like. Are we heading up? Are we heading down? Are we ranging? What's going on? And then I start trading. And I take a break 10:30. Just 15 minutes. I take a break 12 o'clock, just 15 minutes. Then I go for lunch at 1, 1:30. My day is structured. Okay, so it's structured and I have a routine. When I'm done working, I look at my performance. How did I do? Because we keep track of that, and I really hope everybody keeps track of all their trades. Because I did cover this in a previous video. It's very important to keep track of your trades, to keep a trading journal. And actually, here's another tip. If you do keep a trading journal, it shouldn't just be your wins and losses. You need to also add in how you're feeling. Put your emotions down. Not necessarily per trade, but per session. So I'm trading today, and when you sit down and when you start actually taking trades, when you start actively trading, just write down how you're feeling. What you're feeling inside. Are you anxious? Are you nervous? Are you excited? Are you sad? Are you happy? What are you feeling? One of two things is going to happen. Number one, you're going to realize that there's much fewer emotions, or that much fewer emotions than you think you do, and that there's a lot more than you think there are. I highly encourage everybody to go read up, do some research on different emotions and stuff like that. There's a lot of them, and most people, when you ask them, will say sad or happy. I used to too. I'm laughing about this, but I used to be like that as well. And I realized there's a ton of different emotions, and I basically never knew how to define what I'm feeling, which is in itself a major thing. So yeah, that's something to look at. But still, keep that in your trading journal as well. And then after a while, like I said, two things are going to happen. One, you're going to realize about the emotions. The second thing that's going to happen is you're going to start seeing patterns. On days when you're feeling a little bit anxious, you're not performing as you should, or you're performing worse on days where you're feeling excited, or you're feeling content, or whatever you're feeling. You're gonna realize that when you have more positive, more negative feelings, emotions than positive emotions, or if the positive emotions are more dominant, you're gonna perform worse than you would if you were when the positive emotions are dominant. And you will see the results on paper. You will see it for yourself, your own results, and then you can identify these days and identify these situations and do something about it. One of the important things about not treating, but fixing these things is identifying that it's actually happening. Okay. So today's video was a long one. I'm gonna cut this here, but I need you guys to remember that trading, in my opinion, from my experience, everything I've seen, how people struggle, trading is 20% strategy and 80% the stuff we spoke about today. If you can have the best strategy in the world, and you will still lose money if you don't have the tools to use that strategy properly. And those tools are we are the tools. We are using that strategy. Our mental clarity, our health is so important, especially for us as traders. This is something we must focus on. We must look after it. The same way that you need to exercise your body, you need to exercise and train your body, you need to exercise and train your mind as well. This is something we must do, and it's something that's super important, especially for us. We use our minds. Our minds is our money maker. Okay, so it's really important. You're making incredible. We're making decisions under pressure the whole day. We are analyzing and thinking on the fly the whole day, and we need to understand how to handle the emotions and the stuff that comes up with us. We need to understand how our minds work. We need to know what to watch out for in ways that we think, and what to change, stuff like that. So I really, really hope that those of you watching will take this to heart. Take this week, especially this week where trading is not that great this week. Only next week it's going to start picking up. I am not trading at the moment at all. I stopped trading 2 weeks ago, and I will only start actively trading again next week, basically start my year next week. But this is a really, really good time to work on these things, to get into the habit of doing this. So by the time we kick off, we really kick off next week, or maybe the week some of you are maybe on leave and only starting in 2 weeks, but this is a great time to get this stuff done and get into the habit before we kick off, get into serious trading, because then we're going to start looking, from next week, we're going to start looking at some indicators again. We're going to start looking at strategies and stuff like that again. We're going to do a lot of technical stuff, but this is probably, if you don't have this right, none of the other stuff really matters, because we need to master this. Okay. So guys, this was a link. This was longer than most of my videos. I'm over an hour. I apologize for that, but it's something that needs to be discussed. So yeah, let me give you guys that promo code again. If you're with PO Broker, your promo code PSY80 or SY80 for an 80% deposit bonus. Thank you guys for watching, and remember, if you guys will be so kind to hit that subscribe button, it does help us out a lot. And then also, if you do want to get a notification for, because the streams actually get scheduled a day or two before the time. So you will be notified a day. If you hit the notification bell, you'll be notified a day or two ahead of time, ahead of the stream. And you can add it to your calendar or whatever. So yeah. And so yeah, guys, until then, I really hope you enjoy the last bit of the festive season. Please be responsible. Those of you that's traveling or partying, do so responsibly. And those of you that's trading, as always, trade safe, trade smart. And until next time we meet, cheers.